Maybe you know the company Stamps.com, especially when you're living in the US, you might heard of them, and boys, this stock alone made 113% gain in just 2-3 days. Last week it was one of the top performing stocks on the stock market, and in today's video we will look behind this turnaround story because it didn't look very well in the last couple of weeks, months ahead to this gain for Stamps.com, and what it is all about and why it gained so much on earnings. All about it here in this vlog.
Wolf of Dubai.
So let's talk about Stamps.com. Now the name, as you can guess, is a little bit old-fashioned. Now this names with .com is usually prior to the .com bubble era, where everything that was fancy put the .com in their name, and they were just one of the upcoming companies and blowing up in value. And actually Stamps.com started 1996 when it was founded, is an American company, and it provides internet-based service for mailing and shipping services. So you see the name already says what it is. You can buy online stamps, you can print it at home, and then they use USPS, so the US Postal Service, to transfer your packages, and lately they are using also UPS to transfer your packages. So you can actually, it was back then, like 20 years ago, a really revolutionizing company, and since then they grow. They actually started as Stamp Master and was among the first companies to obtain an USPS, so US Parcel Service approval for beta testing and introducing internet postage to the market. The Postal Service began announcing proposals for digital delivery postage in 1996. This is a really big deal back then because internet was just growing up, the .com bubble was in the making, and therefore all these internet companies was quite new. It's something a little bit comparable to today, like if you would look into AI companies or robotic companies, was something new on the market. Everybody want to be involved, and therefore, you know, it got traction, and therefore for their 1996 innovators, they were in the Postal Service. So actually quite interesting story. Since then they growed, and then happened something for the stock that was unfortunately not so fortunate. Now let's look into the stock. If we're looking into the stock, then you can see that it was still, no movement for a couple of days. In the beginning of last week, we were around 88. And then on the 20th of February, the stock went up the first 57%. And then on Friday again, and total, if we consider the whole week, we grew more than 113%. This is unbelievable, this is such a huge jump that I barely see for such a big company. Now we are talking about a quite good mid-sized company with almost 3 billion market cap. So this is not a penny stock. We are talking about the market leader in services for postal here in the United States. So what happened was that actually, if we're looking a couple of months and years back, the stock was at one day $270 per share, and then lost about 85% of their value just in a matter of a couple of months. So you can see from 1st of August till the 29th of May, approximately 88% lost in value. This is huge, guys, and this was one reason why this is a great turnaround story, because what happened was, and while there was a big crash for stamp stock, because they announced that the only exclusive deal that they were able to produce the stamps and services for the US Postal Service was cancelled, and this was obviously a shock stock because most of the revenue came through the US Postal Service, the USPS, and therefore it was quite a shock for investors. And it was something that the management decided also to be more diversified. And something happened then in the last quarter, and this is what we're diving in right now into the numbers of the Q4. So the huge surprise came with the earnings per share and also with the revenue. So to come directly to the point, $2.12 per share earnings versus expected $1.03. So more than doubled the expectation on Wall Street. This is obviously a huge impact on a stock, and this is actually one of the main reasons that the stock went up that much, 50% after this earnings, just because there was just huge surprise. Nobody expected that they could get so much earnings per share, with the fact that they are now using not only USPS but also other services and diversify from this one client. So nobody expected this, and this is something general about earnings. If there's a big beat of expectations, then you see usually this big spikes. You see especially volatile stocks like Tesla or other companies, Beyond Meat, Virgin Galactic, all of these growth companies, Netflix as well, are seeing huge differences in stock prices after the earnings, depending how the earnings are. If good earnings, you see like a 5 to 10% increase. On a bad earnings day, you see also a 5 to 10% decrease of the stock price, and this is normal. But for a company that is more of a tradition, this is huge. This is a huge move that actually nobody expected. And then of course also the revenue was more than expected with $160 million, 0.9, and also expected was just $144.7 million. So a huge beat here on all these numbers. Also, what was really positive here, the guidance and the statement of the CEO Ken McBride confirmed that Stamps.com now has both a great new partnership with UPS and also the new long-term agreements with the USPS. So you can see that they plan to diversify, not only worked out that they have two options now and two big clients, but also they have the great operation that supported all of this and showed us that something like this is possible, and very positive for the company, for the investors, that absolutely amazing. And also what was really great here, beside the statement of the CEO, the overall guidance for this year was between $4 to $5 per share on the full year outcome versus expectation by $3 to $4. So you can see on the whole range of numbers, this was so positive, and that's why let's jump into the conclusion. What we think about Stamps, and is it a good timing to buy in, or is it the story gone, or is it just beginning? Everything now in the conclusion. So what is the beauty about turnaround stories is, if a stock goes from 100 to 50, it will lose 50% of value. But if it goes back from 50 to 100, then we have 100% gain. And this is the chance here for Stamps. If they can go from these levels to even further, somewhere close to the all-time highs, now with this good numbers and this good outlook, and the overall market trend is going up, then this could be a good opportunity to gather some percentage here. However, the overall year-over-year growth of revenue is -5%. So it's not a growth company here. It's like a big traditional company with a lot of history, with steady steady income with good to partnership on restructuring course that is still going on. So this is the first big quarter that was really positive and such a surprise, and therefore, you know, I would be on the sidelines for that, because after such a huge gain, you know, you might think that goes further up, and it may go further up and go further 20-30% this week, but it can be also that it can drop 20-30% just in one day. Just people trying to get their profits and traders are getting the profits. This market volume of trading STMP.com was huge, like $7 million was traded versus the usual expectation of $300,000. So you can see how much interest it was. More than 20-fold was the interest of trading the stock and trading it in both ways. There's for sure a good short interest now in this stock, so don't burn your fingers on that. Definitely something that you could put on your watch list and see how it develops. Maybe we will have a correction of the stock soon, and then maybe it's an interesting point to get into the stock. If it's the case, then definitely I will cover it here. So let's make some stamps and send some love from the Wolf of Dubai to the subscribers here. Thank you so much for watching. Make sure to like this video as well.